What's up everyone, it's Scotty with Money Investing. So welcome on board for yet another market open live stream here. We've got the NASDAQ, QQQ index, QQQ ETF a little bit higher, just over 35 basis points. We got the SPY up over 22 basis points, and we got the Dow Jones up over 34 basis points. Just give me a thumbs up if you guys can see me and hear me. Just let me know if audio and video is working absolutely without any issues, and we should be all set and good to go. The PPI numbers also came out, so producer price index was also out today, which I'll break down here in just a minute. And then of course a lot of upgrades and downgrades from a lot of analysts on Wall Street. Oil continues to push higher. Brent and crude are pretty much flat here on the day, with the volatility also flat, just up over 40 basis points. But Bitcoin and Ethereum have seen a little bit of a rally here in the last couple of days, with Ethereum back over to 3,300 and Bitcoin also back over $44,000 as of the time of this stream. So perfect, awesome. Welcome everybody on board. Happy to have you guys. And let's just quickly break down the earnings. So we did have Delta and TSMC report before the bell. We'll see if we can find earnings for those companies. I think TSMC had a big earnings beat, and then I'll also break down Delta's earnings here shortly. But then tomorrow, to close out the week, we've got some big banks and financial stocks reporting the earnings, with JP Morgan, Citigroup, Wells Fargo, BlackRock, and First Republic Bank all reporting their earnings tomorrow before the bell. So that's going to be super important. And this right here, of course, is the January 2022 calendar. This is also available for everyone to download and take a screenshot of. If you're part of our Discord, you can find this in our market updates channel. So today is Thursday, January 13. We had the jobless claims numbers come out, and the PPI and the core PPI, that's your producer price index numbers, come out today as well. And then tomorrow, we've got the retail sales, import-export prices, and consumer sentiment that also comes out. And then next week, we actually don't have anything. And the following week, we've got the Fed meeting. So we're going to learn more about the Federal Reserve's interest rate decision. I did a video recently going over how interest rates actually affect the stock market. So make sure that you do watch that video if you're looking for a refresher, or if you're looking to get a good understanding on how the Fed funds rate and the discount rate actually affects the markets and what that ripple effect looks like for the markets as well. We also go over the S&P 500 and the Fed funds rate. I kind of overlay that chart to go over how the S&P 500 has reacted for every interest rate hikes that we have seen going back as far as 1950s. And then finally, we've got the GDP estimates coming out on Thursday, January 27th. And finally, the PCE, that's the personal consumption expenditure, and the core PCE as well, along with the consumer sentiment, also coming out on a Friday to close out the month. So that pretty much wraps up our calendar. Let's just quickly break down some of the PPI numbers. The wholesale prices up 0.2% or 20 basis points in December, less than expected, but still a new full year record, because year over year they are once again hitting a new all-time high. So wholesale prices rose less than expected in December, but still a new standard at a time when consumer inflation is running a nearly 40-year high. The Labor Department said Thursday, so we learned about the CPI numbers yesterday. Inflation was well over 7%, core was well over 5.5%, and the producer price index, which is the PPI, which measures prices received by producers for goods and services and construction, was up 20 basis points for the month, half the 40 basis points that was the Dow Jones estimate. So coming in at a lower than the expected number. However, on a 12-month basis, year over year, the index was up over 9.7% to end 2021, and the highest calendar year increase ever in data going back to 2010. So this is about an 11-year high for PPI numbers as well. This right here is the initial jobless claims for the week ending January 8th, total 230,000, well above the estimates of 200,000, and considerable increase from the previous week's 207,000, so slight increase there in the data, but for the most part, we are pretty much flat here, coming in just about 200,000 per week, which is pretty much in line with the pre-pandemic levels as well. Goldman Sachs upgrades Bumble and Match to buy from neutral, so they actually have received a couple upgrades. The Bumble and Match, I think they both have been selling off quite a bit, hitting a new 52-week low, and I think pre-market they are up a little bit over 4% here. Then we got Mizuho names Tesla and Rivian as top 2022 picks. Credit Suisse reiterates Netflix has outperformed. We see four clear dynamics for Netflix shares going into fourth quarter 21. Investors' interest is as low as we have seen in the past 8 years. Sentiment regarding the fourth quarter 21, first quarter 22 net adds has faded, with some negative previews, with fourth quarter's record content slate. Results are watershed moment for Netflix thesis. So it's very, very important. I think Netflix is going to have to report with very, very critical numbers in order for them to kind of get that momentum back higher. Piper Sandler initiates coverage of Match as overweight. Then we got Deutsche Bank naming Ford, Tesla, and GM as the top 2022 pick as well. Then we got Cowen downgrading Snapchat to market perform from outperform. Cowen reiterates Amazon as outperform. Amazon's got an insane number of upgrades here and outperform ratings over the last couple of months, which we also broke down in our yesterday's live stream. But the stock obviously has not really performed that well. Truist initiates coverage of Target as a buy. Then we got Susquehanna, whatever that firm is, downgrade another Southwest downgrade here to neutral from positive. I tell you, this stock cannot catch a break. I don't know what Southwest is doing pre-market here, but let's take a quick look. And we are flat, so just up over 0.5%. But again, another downgrade on Southwest. This stock just can't catch a break, unfortunately. Bank of America names Apple as a top 2022 pick. That's very pretty generic here. Truist upgrades Home Depot to buy from hold. Piper Sandler upgrades Check to overweight from neutral. So I do think Check trades at a very, very low valuations considering the big sellout that we've seen for the company. I think it remains down 40 to 50% from all-time highs. And the same firm upgrades Delta Airlines and United Airlines to positive from neutral after downgrading Southwest. So very, very interesting here. Gradual recovery in a high margin business. Hence, we are upgrading global carriers Delta and United to positive as gradual recovery in high margin business and long haul international travel, along with various revenue and cost savings initiatives, should help support EBITDA growth in 2022 and 2023. JP Morgan reiterates Apple as overweight. Then we got Guggenheim upgrading Solar Edge and Enphase Energy to buy from neutral. And that pretty much wraps up our entire presentation. Let's take a look at Delta. We're up a little bit over 2.3% here. Let's see what they actually reported for the numbers. So this actually came out on January 13th. Delta warns of loss in current quarter on Omicron turbulence. On Thursday, reported higher quarterly earnings on back of the stronger holiday travel demand, but warned of a loss in the quarter through March due to turbulence caused by the new variant. And let's see if we can find the actual results here. Delta had to cancel more than 2,000 flights. Since Christmas Eve, U.S. airlines have canceled more than 31,300 flights, or about 7% of the scheduled total, according to flight tracking service FlightAware. That's a lot of flights that were canceled. I'm sure Southwest also had a lot of cancellations here. Gained 2.2% pre-market trading after beating estimates for fourth quarter earnings and said it had recovered nearly 80% of its 2019 pre-pandemic level revenue. That's actually very strong. And that, again, it gives us some more guidance as to what Southwest and some of the other airlines can report. But that is a very, very strong recovery. 80% of their 2019 pre-pandemic level revenues is a pretty substantial revenue, just considering where we are with cases coming in from the UK and the US as well. So, but overall, strong beat for the company, for Delta, up another 2.2%, so very strong move to the upside. Resistance right now is going to be staying put at close to $45, $46 for Delta as well. Let's take a quick look at TSM, and that stock is also up over 5.4%, hitting back to new all-time highs, possibly from February 2021 levels, and back over this $139, $140 per share for this company. So, manufacturing post higher Q4 earnings, revenue issues Q1 2022 outlook as well. So Thursday reported fourth quarter earnings at $32.05 new Taiwan dollars, or about $1.15 per diluted ADS, up from about 27.53 new Taiwan dollars. And the net revenues were 438.19 billion new Taiwan dollars, and then compared with 361 new Taiwan dollars as well. So big jump here in revenues and earnings for TSMC. And the chipmaker said it expects revenue between $16.6 and $17.2 billion in the first quarter 2022, with a capital budget of $40 to $44 billion in full fiscal year 2022. So overall, from what it seems, very, very strong numbers. And this stock obviously was trading at very low valuations. It has had a very strong rally of close to 29 to 30%. Year to date, I think the stock is a whopping 15, 14% so far this year. So very, very strong move to the upside for TSMC. So again, congratulations if you have been holding on to this company. All right, so I've spoken a lot, and I want to hear from you guys because the live chat seems a little bit quiet right now. And welcome on board, everyone. So we got NASDAQ still up over 37. We got the SPY up over 23, and the Dow Jones also up over 33 basis points. Let's take a look at Tesla, up over 63 basis points. Then we got NEO pretty much flat. NVIDIA up over 1.6%, so very strong move in NVIDIA. And AMD is also up over 1.6%. So overall, we seem to be doing okay. Not bad. Futures are green. Broader markets are green. VIX is just about flat here. And then we got oil prices pushing up, and Bitcoin and Ethereum also pushing up. And as a result, some of the Bitcoin miners, so Marathon is up a little bit over 2.7%. We did add some more Marathon pre-market today. So again, I'm actually going to be building out a much bigger position. I do have plans of buying at least more than 600, a little bit over 600 shares left that I still need to buy for Marathon. So Shiv, welcome on board. Thank you so much for joining. Green Day, yes. So far it kind of looks like it is going to be a green day. So what are your other hobbies other than investing? So mostly football. And again, that's let's see. You expect Bitcoin to break out of that downtrending channel? So that's a great question. Obviously, it really depends on what we do when this resistance gets hit, because this resistance right now in the $46,000 range right here is aligned with this lower high. So inside this downtrending channel and this previous horizontal resistance, right? So it's going to be very interesting as to what we see. Now, historically, January, February, March has been very strong for cryptocurrencies. If you look at the monthly, like the seasonal chart going back 6-7 years, February has been one of the strongest months for Bitcoin. So, considering those odds, the probability, and of course the RSI and the MACD and how it's looking to cross over that signal line, the RSI also coming from an oversold level, it does point to some potential probabilities that we're going to see a breakout over this level. But I'm fully prepared for us to see a $37,000 retest. That's going to be that next support level to watch. But if you do get that breakout and then a retest of that support, so what I really am looking for is a potential breakout, come back down, retest that support, and then potentially back over 53,000, and then obviously have that staircase pattern where we validate that support and move higher, making higher highs and higher lows. So that's kind of like the thesis behind why I'm long on Marathon, and I expect a strong rally for Bitcoin eventually. All right, so we got about 30 seconds left. What do you guys think? What are you guys thinking for the markets here? So, all right, so am I frozen? Lagging, it froze, lagging, froze. All right, just want to make sure. All right, is it back? Hopefully it's back. All right, perfect. Okay, good. So hopefully I'm back online. All right, so off we go. The markets are open. Tesla is just over 1100 right now. All right, perfect. And Neo just about flat here. AMD still up close to 2%. Nvidia also pushing higher, 1.2. We got the Dow Jones still up, however, starting with a red candle, and same thing with S&P, same thing with the Nasdaq as well. All three starting with a red candle in the first 5 minutes, but still so far very, very green. Not very green, but moderately green, up over 25 basis points. It's bad, but super bad quality. I do apologize for that. I don't know what's going on. The internet connection should be just about as usual as what it has been in the past. I don't know why today is anything different, but maybe give it a few minutes. All right, Niti says I'm lagging again. hopefully it gets fixed up. Enphase, I think, got an upgrade today, up over 4.7%, so very strong move to the upside for Enphase, already coming in from pre-market. Mara is back over to $31. Then we got, let's see, TSM, how is it doing? Pre-market, we were up over 5%, and right now, wow, we're up over 7.4%, a very strong breakout. We're possibly going to hit a new all-time high here. All-time high sits at 142.20, and there we go, boom, right there, new all-time high for TSMC. Market cap, again, this is a little bit different, I think, in terms of currency, but crossing over to new all-time highs here, a very, very strong move in TSM, and yeah, overall the chart looks very strong for the company. We did see a lot of consolidation here, right? So if I just remove everything, this was a lot of consolidation for TSMC before finally getting that breakout to the upside. I mean, this month it's up over 18% in January alone. A very, very strong move to the upside for TSM. Netflix, this right here is the chart. So Netflix is down another 0.5%. So I actually shared this with one of our members in our Discord. 475 is a level that I'm really watching closely for Netflix, but this is also, or can be also seen as some type of a higher low for Netflix. So this is going to be some type of an ascending support for the company, which we have also validated. So if you come over to the weekly chart, you'll notice that we have been validating the support time and time again. Once in January of 2015, this right here, August of 2016, and then we got September 2019, we got March 2020, and right now we're just testing that support once again. So this is a very, very strong ascending support level for Netflix. But if we do get a breakdown, then I'm going to be watching 475. I think that would be a very, very interesting and attractive level for us to get in on. And that's going to be that support, previous support horizontally that we validated for Netflix. So 475 is the level that I'm really watching for this company. All right, so we got NASDAQ getting bought up here fairly quickly. S&P still up, and the Dow Jones just still up over 30 basis points. Pretty much everything is up 20, 25, 30 basis points here so far. However, NEO is coming down over 1%. Take a look at AMD here, up over 2.5%. Really getting bought up very, very quickly. But let's take a quick look on all these stocks here, starting with the reds. We got growth generation down about 9%. Oh my God, this stock is down to $10. $10. This is insanity, you guys. It was at $65 a share. Like, I have this on my watch list because it had such high momentum going in, like 2,400% growth. But I just wanted to keep it on my watch list. Never really, talked about it or never really traded or invested in. But this is insanity. That this stock is down to $10. I'm just seeing it today. Snapchat got a downgrade on the day today, so that's why I think it's down a little bit over 4%. So $37, $38 is going to be that next support. God damn it, it's lagging again. Oh my God, this is so frustrating. All right, we're just gonna have to give it a minute or two to see if it actually does get better. All right, so some people are saying the no lag for me, some are saying it's lagging. Just gotta give it a minute. But as I was saying, Snapchat with the downgrade down a little bit over 4% right now. VIX is up over 1% here. Looks okay now, it goes in and out, but okay. So hopefully this thing doesn't go out anymore. But anyway, so let's just run through our watch list again. So as I was saying, I don't know if you guys caught it, but growth generation down to $10, which is absolutely insanity. The stock has come down over 80% plus, 84, 85%. This is crazy. This is like an insane amount of losses. But Snapchat with the downgrade down another 4.4% today. On the week, it actually is forming a doji candle, so a lot of indecision right now. And this right here is kind of like a downtrending channel where it continues to make these lower highs and lower lows. And support level right now is going to stay put at close to $37. Previous support level to be validated, and this is going to be that next support level to watch for Snapchat. What happened to Stevie Wonder? He's no longer here. He's gone. He had to shoot other music videos, so he's no longer here. So let's take a look at Baidu. So down a little bit over 1.9%. This is the overall pattern for Baidu right now. So lots of lower highs being formed. Support level very, very strong at $133. Then we got Unity Software down another 2.2%. We got Twitter flat, Neo down about 1%, Netflix flat, ARKG down another 84 basis points. But let's see what's actually green here. Enphase, Spotify, IoT, Visa, Qualcomm, AMD pulling back a little bit, but Qualcomm, I think very much pushing higher once again, 173, 174, acting as a support here. And just consolidating sideways for the most part, Qualcomm is. I think the valuation continues to be very, very low for this company, and this is for the most part consolidating right now. Teradyne up over 1.7% to 165, almost getting up to new all-time high here. Let's see, Fiverr had a pretty steep sell-off yesterday. I think it was down over 4 or 5%, 4.5% yesterday. and today just up over 1%. PayPal also had a pretty steep drop yesterday, but for the most part, just consolidating right now. Um, So, all right, Caddy, you were mentioning in one of your videos you were planning to buy some cybersecurity stocks. Do you plan to buy any? They're quite beaten up from all-time highs. Yeah, so I mean, I'm looking at two companies pretty much. It's CrowdStrike and Zscaler, ZS, and Fortinet. Actually, three companies that I'm watching very closely. I think Fortinet is the only one that somewhat trades at okay valuation. I mean, even then, it's like a 97 times earnings, 17 times sales, and 38 times cash flow, right? So 17 times sales is much better than some of these other companies like Zscaler. If you come down to some of the fundamentals here, 50 times sales, 145 times cash flow, got no earnings, so we don't have a price to earnings. And CrowdStrike, I think it's like a whole different level, very similar to Zscaler. I think 34, 35 times sales, 82 times cash flow, doesn't have an EPS, so we don't have a price to earnings. But you get the idea, right? So I really want to invest in cybersecurity, but again, these valuations are just way too rich for me. I would love to get them, but at a lower price point or a lower valuation. So for me, it's mostly a waiting game, and wait patiently to see if they ever get down to levels that I'm very interested in. If they don't, then I might look into some ETFs that already have these, and I might just like start a very small position and then dollar cost average as it comes down. Because then if you just wait for the perfect buying opportunity, it may never come, and then you risk kind of sitting out, to actually be able to invest in some of the best opportunities out there. So um, it is what it is. Valuations are very, very important. They've always been very important, and they always will be very important in the future. So it all comes down to where you're comfortable kind of buying some of these stocks. Um, Yes, I can do a deeper analysis on some of the cybersecurity companies. They may have a higher valuation for a reason. You're right. I mean, because of the stronger growth rates. I mean, the growth rates I mean, just take a look at this. They've gone from 52 million to over 874 million dollars in revenue. CrowdStrike has. That's like almost 2,000% growth over the last 5 years in top line revenues. So there's a reason why investors want to own these companies, because number one, they represent a very, very big addressable market. I mean, cybersecurity is going to be huge in the future. I mean, there's no doubt, right? It's going to be one of the biggest markets out there, is going to be cybersecurity, right? And number two, this is like top tier companies that are providing cloud services to other companies. They're business to consumer, business to businesses, and the revenue growth is just so phenomenal. So there's a reason why they're traded such high valuations, because of the strong fundamentals and strong growth. But again, you just can't disregard valuations altogether. I think it's always going to be a topic of discussion. So let's see. Why did you choose VUG for your experiment? Great question. So I like all Vanguard ETFs, so anything Vanguard related. So if you type Vanguard over here, um, you know, I really like the issuer Vanguard, and I could have picked VO, which is the S&P 500 as well. But I wanted some type of a growth aspect to it, because I mean it all comes down to the structure of how these ETFs are constructed, right? More or less the expense ratios are same. It's like the lowest in the industry. So you're not really paying an active manager, you're not really paying a lot of fees to actually hold these ETFs. But I wanted VUG because it's got a little bit of a growth oriented approach, meaning that it follows the Nasdaq more than it follows the S&P 500, and the top 10 holdings are also more towards like the tech and growth oriented companies, right? So we're talking like Microsoft, Apple, Facebook, Amazon, some of those companies. So that was like the big sort of encouragement or the big focus as to why I wanted to choose VUG over VOO. But I think issuer matters a lot. I think Vanguard is like world renowned ETF issuer for low fees. So that I really like. All right, so let's see. So what is the expectation for the markets next week without much of economic catalyst? Not a whole lot. There's not a lot that we have to go over next week in terms of catalyst wise. So again, we don't have anything coming up. This week we've got retail sales. We do have earnings. So earnings will be big. I think that's going to be very important going into next week. So earnings season is just getting started. So I think that's what's really going to drive the markets going into next week. But talking of markets here, S&P is still flat for the most part, up just over 21 basis points. We got the Nasdaq up over 30 and the Dow Jones up over 27 with the volatility still up over 1%. Bitcoin back over 44,100. That's good. Ethereum back over 3390, almost at 3400. And we got Marathon up over 1.7%. BITO up close to 1%. Clean Sparks up over 2.7%. Riot with a nice move up over 3.2%. And then we got Grayscale Bitcoin Trust also up over 2.5% right now. So thoughts on TSM, we already went over that, Gabe, so you can kind of go back on the live stream and watch that analysis and then kind of jump over to the actual live stream, but we did spend some time on TSM. Let's take a look at APPS, so Digital Turbine. Let's see how this stock is doing. So, wow, this stock has been very much back and forth, right? I remember this stock was selling off so much around here because of insider selling, because of the short interest that was spiking, and I think this was added to the S&P 500 or S&P 400 mid-cap index. I could be wrong, but they actually were added to some index. Forgot what it was, but they definitely were right here. So Digital Turbine shares jump in heavy trading stock to join S&P 400 mid-cap index, and this actually is a catalyst from August. So August was right around here. So August 31st, this was the jump, gap up of 14% that we saw. That really kicked us off and triggered that 94% rally up to $93. And then obviously ever since we've seen a big profit taking and just a lot of selling pressure here, but the support level stays put at $47, $48, right? This has been the support level for APPS. It's validated not once, but twice, 3 times. And resistance is going to stay put at close to $64, $65. Revenue growth has been strong, but the valuation is still very high at almost 100 times earnings, 125 times cash flow, and over 52 times enterprise value to EBITDA. So those numbers remain incredibly rich for the company. But I do like what they do. And of course, the revenue growth has been very, very strong. And earnings growth has also been very good for the company. Let's take a look at SPCE. So Virgin Galactic with a big unfortunate drop of 14%. Not really sure what happened here. Let's see if we can actually, all right. So Virgin Galactic Holding proposes $425 million debt offering. Convertible senior notes due 2027, $425 million private offering. The company expects to grant the initial purchase of notes, an option to buy up to additional $75 million of the notes. That was a big catalyst here. So that is just from today. Is that the only reason, or is there anything else? But yeah, big drop on SPC. This is by far the most volatile stock I've actually witnessed myself. By far, the most volatile. If you have been trading or investing in Virgin Galactic by any means, props to you, literally, because it takes a lot of courage to actually go through this much volatility here. Because we're talking from $14 up to $62. That's a 335% gain in just a matter of few months, and then a drop of 76% only to rally back 300% in a very short span. This happened from May till July, in a couple months, only to drop once again over 80%. So for Virgin Galactic, it happened way too fast, too quickly. Even the rallies and the drops, and then a rally again and the drops. It was too much volatility for investors. Grow Generation's on a big sell-off here, down now under $10. Upstart 116. We got Tattooed Chef at just over $14. So Tattooed Chef has also been selling off quite a bit here. Yeah, emotional roller coaster for sure, David. Let's take a look at IDEX, Ideanomics. So down to $1.17. It's come down from about $5, sold off about 78%. I've done some technical analysis, maybe during a live stream, because I have some lines here, support resistance levels, but I have no idea what the fundamentals look like for the companies. So 5.65 times sales, so actually not bad, but this is unfortunately the only metric we have that we can look at. Just from this screen, what is one thing that you guys can notice which is a big red flag for IDEX? Let me see if you guys can actually figure this out. And I'm going to keep it over here. And again, one thing that you guys can figure out in the live chat, just let me know. What is the one big red flag that you guys can notice? just based on these numbers right here. Let me see if I can see it in the live chat, if you guys do actually comment. So price to sales obviously has come down from 20 to 5.65. So yeah, Vitruvian got it. Shares outstanding. It's the top line right here, right? So this number has literally went from 23 million in 2014 to now over $344 million, right? That is a lot of dilution. So Pew got it, Sanjeev got it, all of you guys, perfect. You guys are on point. Share dilution is tremendous, right? So it's not a surprise how the price has not reacted positively to that. Obviously, it's a negative catalyst because the company can do everything possible. And that's kind of like a very, very hidden red flag, is because the company can do everything well, right? They can hit every picture perfect scenario. They can hit every target. They can grow revenues. They can literally 10x revenues and grow their market cap by 10x. But their stock price will not do anything if the shares also go up the same amount as their market cap, right? So it's a big thing. It's a big thing for companies to not do that. So unfortunately, I mean, IDEX, I will keep a close eye at this support roughly in the $1.15, $1.14 range. But fundamentally, I might have to do some more research to kind of, go over what this company actually does. For the most part, NASDAQ, S&P, Dow, just flat. Not really doing much here. NVIDIA seems to be coming down quite a bit, just flat now. NEO's flat, AMD's still up, Tesla's up, Enphase is up over 3.3%. And Tesla, I think, is mostly flat here. Yep, just down about 30 basis points. So yeah, not a lot of stocks making a ton of moves, but PayPal slightly up over 1%. Marathon's giving up on most of those gains. So is CleanSpark. So is some of the other Bitcoin-related companies and miners, as Bitcoin also just comes down back a little bit over $44,000. TQQQ, a good buy. 118, 117 is the level that I'm watching, really, on this ETF. So yeah, actually, is this the one? Oh, so they already split. I hate when that happens. And TradingView needs to fix this, is because one time, well, this has happened several times. I'll have my technical analysis on a stock, and then they split, and the price is trading at a much lower level, but the technical analysis all the way over up here, and there's no charts. It's just the analysis. I've had to redo the analysis on Tesla, on NVIDIA, on Apple. TradingView needs to figure out a way to kind of adjust the analysis to the actual split. But I think they split 2-1 today. I think today it was supposed to happen, so then they're now at $77. So the new support that I would be watching for them is going to be roughly in the $58, $59 per share. And you might be thinking to yourself, well, that's never going to happen. Well, with levered ETF, it happens very quickly. They can drop and they can go higher fairly quickly because of the leverage factor. And the NASDAQ only needs to be down 10% for this ETF to come down about $58, $59 per share. So I think that would be a very, very nice opportunity for us to at least take a leverage position at those levels. But overall, it seems to be validating this higher low, right? So this is a nice ascending support that TQQQ is validating, just pushing higher from the staircase pattern, just up and up and up, and just consistent higher lows being formed by this ETF. So we've got one support at this ascending support, higher low, but if it does break down, then $58 is going to be that next level to watch. Michael, yes, I have looked at Matterport. I've actually done a complete analysis on Matterport as well, so you guys are more than welcome to check that out in Stocks Under 30 Minutes. That's a playlist, and you will find a more detailed analysis on Matterport and their business and their valuation, all that stuff. It looks like we had a head and shoulders pattern for the company, left shoulder, head, and right shoulder, then a breakdown below $20. And then right now, just over $15. Next support is at $13 per share for the company, which I would not be surprised if you do get down there. So again, this right here is going to be that next level of support at just about $13. But I do have a more detailed video in that playlist that you're more than welcome to watch. Let's take a look at Skills. So Skills, wow, this stock. I mean, a lot of stocks that I'm kind of revisiting now because we have done some technical analysis on them from like a few months ago. And they're just like big surprises right now to me. because like I can still believe that Crow Generation's down to $10 and then it's now Skills down to $6. I was looking at Wish.com the other day to just kind of catch up. It's at $3. This is insanity. This is so much selling pressure. Um, and I feel like if you were to club a lot of these stocks together, they kind of do represent some type of a bubble bursting. We may not have seen it in the general market, obviously, because the general market is a lot more stable, I should say, with the quality companies. But some of these stocks that I'm like visiting again is just it's crazy, man. Like 92% drop here. I think Wish really takes the crown here for the company that's down the most from all-time highs from same time last year. This is 1 year pattern, 1 year for Wish, like 1 year, 90%. Incredible. For Skills, hard to really do any type of analysis here. I mean, now it's come down to 7.4 times sales. I mean, you'll notice in 2020 it was at 32, right? Quarter over quarter, where were we? So price to sales. I mean, take a look at this. And this is a great learning experience. Q4 2020, the price to sales ratio 109. And look at what happened with the actual revenues, right? So again, this is a great learning experience. Look what happened for the revenues. $67 million, price to sales at 109, right? So you had the stock price way too high for very little sales. That's the discrepancy. That's why the valuation was so high. What happened over the last 3 quarters? Sales went from $67 million to over $102 million. That's a good almost 95% growth for the company. So sales almost doubled to 102 million. So your numerator is going, your denominator is actually going higher and your numerator is dropping, right? That's the price. That's the market cap for the company. That's going to be this right here. And as the price drops and sales go up, now you've got a stock that's trading at 7 times sales, right? Versus 109. So now I think people are going to look at this stock and now it's trading at a fair, quote unquote, possibly a fair valuation. Still wouldn't be undervalued by any means, but it's a lot fair in terms of the valuation versus where it was earlier. So again, it's very important to keep track of price to sales and price to earnings and just price to cash flow, some of those metrics. If it's a quality company, then sure, it can weather through 20, 30, 40% pullbacks and then still recover. But then unfortunately, for companies like Skills that are down a little bit over 86%, it's going to take a lot of momentum for the stock to rally 662% just to go back to the same levels as it was from February 9th. Very, some of these stories are going to be there in the markets. Quick take on the markets here. NASDAQ still up over 42 basis points. The S&P is up over 30 basis points, and the Dow Jones also up over 36 basis points. Overall, the market's doing okay. Tesla's back over 1,112, up over 0.5%, and NIO's also pretty much flat here. NVIDIA, 0.5%. AMD is also up over 1.8%. PayPal's up close to 0.5%. Qualcomm still pushing up. Teradyne, Enphase doing okay. And TrueLeave is just pretty much flat here on the day so far. All right, so Harry, thank you so much for smashing that like button. Really appreciate it. UPRO split as well. All right, let's take a quick look and where that's trading. So UPRO is now at $74. Okay, that's good. So we got to remove this analysis and we'll keep a close eye on where that next buying opportunity is going to be. I think it's going to be the 50 EMA that it continues to kind of validate, or maybe the 100. Yeah, so the 100 SMA is the one for UPRO that we're perfectly kind of validating. That's pretty aligned with the S&P as well. So the last couple times that we've validated, we've come down to that 100 SMA. The S&P's bounced off and UPR has also bounced off. So earlier, you'll notice that it was the 50 exponential moving average, right? So we had the 50 EMA more as a validation than the 100. So earlier, investors were watching that 50 EMA perfectly bouncing off and off those levels. And once we got that breakdown in September, then we pushed to that 100 SMA. Now I think that's a much better moving average level to watch. But if you do get a breakdown even further, I think that's going to put us down to 200 SMA that we're going to be watching at 4,400 for the S&P. So yeah, we've already broken down Enphase. Jolly, I'm very sorry to hear that. That's very unfortunate. I really genuinely hope that you recover on Wish and Grow Generation, both of those companies. I really hope they recover for you. Um, VUG, SPY, and QQQ, which one is better? Great question. So again, VUG is Vanguard, so you've got the actual expense ratio that's going to be a little bit lower. You know what? Let's just take a quick look here. So we'll just go to ETF.com and we'll just see if you can compare the ones. And it also depends on what type of holdings you want. How do you want to structure that ETF, and how comfortable you are with the distribution among different stocks, right? More or less, they're gonna have the same stocks, but they're gonna have different weightings. So you actually come over here to ETF.com, tools and data. Then there's a comparison tool that you can look at, and you can simply type in different ETFs that you can kind of compare between, right? So right over here, we're gonna type in, let's just say VUG, Vanguard Growth, and then you can type in SPY, right? S&P 500 ETF. And then it'll show you, right? So this is State Street Global, this is Vanguard, expense ratio slightly higher, not a big deal, really. This is 0.04%, this is 0.09. Assets under management, we've got $445 billion for SPY, right? SPY, I think, is probably the most liquid and the most traded ETF in the United States, right? VUG, 85 billion, still not bad compared to some of the other ETFs. This is S&P 500. This is U.S. large growth cap companies, and the number of holdings are 280 versus 507, which is obviously S&P 500. That's why it's a little bit over 500. And then VUG is growth oriented, so it's only got 280 holdings. So SPY, a little bit more diversified versus VUG, more assets under management, more liquid, a slightly higher expense ratio overall. But I think you can take a look at the charts and the holdings and stuff as well. So let's see if you can actually... Yeah, and then if you were to type in, let's say QQQ. No, not that one. That one's short. Right here, Invesco. So that one's from Invesco. Much higher expense ratio at 20 basis points, and literally just half assets under management, and much more concentrated, right? This is mostly tech and healthcare, which is the NASDAQ ETF. So 102 versus 507. So you're getting 1/5 all diversification for about double the expense ratio. For, again, this is the NASDAQ 100, right? So 100 stocks are in that. So PayPal recovery, I do expect PayPal to recover. It's gonna take some time, honestly. For the most part, there's been so much consolidation on heavy volume, right? Previously, the volume has been so low, but now the volume has really picked up, and PayPal has, for the most part, just been consolidating sideways. It hasn't really done anything since November, right? So 2-3 months, PayPal has just been going sideways. Zoom 166, what is that alert? Wow, down under 2.6%. There's another example of a company that, I feel like it's done really well. Fundamentals are still in place. Just because the growth rates decelerated for the company, the stock price has been punished. The growth rates are still strong. If you look at the earnings, the company is still growing at a nice, this revenue, I think they grew like 70 or 80%, or might be higher. In the past, they have posted triple-digit growths. But obviously the stock price has done anything but. Another thing that I wanted to point out is that they have also been diluting shareholders by a lot. So I think it was like 300% or something in share dilution, or might be a little bit over 100%, but it has gone up from 259 million to 293, almost 300 million shares outstanding for Zoom. But this, I think, is also one of Cathie Wood's big holdings, so that has not been doing well so far. Let's see. So all right, Gooden asked, if you had to choose 5 ETFs for the rest of your lives, what would you pick? That's a very tough question. I might have to get back to you on that. I haven't really decided on the 5 ETFs, but I'll definitely pick 5 and get back to you on that. I would definitely be picking like select sector ETFs. So I think cybersecurity, semiconductors, electric vehicles, metaverse, and the general market, obviously general market ETF, but those are like just the themes that I would be picking for the rest of my lives, because those are the themes that I do expect to really blow up and do well over the next several decades, right? So those are cybersecurity, metaverse, blockchain could also be included, electric vehicles, and then another one that I mentioned, I forgot, semiconductors. So those are the five that I would say are worth looking into. And then of course, just picking out the ones that are the lowest expense ratios, the more diversified, the more solid holdings, quality holdings within them. Um, all right, guys. So I am Amazon breaks my heart. Well, mine too. You're not alone. Mine too. But yeah, I mean, Amazon. It's a funny one. It's an interesting one, right? It hasn't really done anything, but I think a lot can be disregarded towards the stock split, which they just are so ignorant to not do. As a shareholder, it kind of frustrates me because um, it'd be one thing if you basically had another Class A and Class B shares that were priced differently. That would be different, right? Because as far as I'm aware, Amazon is only Amazon.com, AMZN, right? Because this is also big tax liability for investors, right? If I want to actually raise some cash and still want to own my shares in Amazon and just want to sell a few shares, I have to sell in significant blocks, right? Yes, there's fractional shares and whatnot, but with companies like Berkshire Hathaway, at least they have two different classes of shares, which one of them obviously is like six figures, and then the other one is like much lower. But Amazon, I don't understand why they don't actually do like a stock split, or at least start a Class B shares, which can be converted into like a different class of shares. But anyway, so all right, guys, so I'm probably gonna end it there. Thank you so much for being here. I really appreciate your guys' support. Make sure that you do check out all the links down in the description below, the Patreon link and the fundamental analysis course link. We still have that 25% discount for the fundamental analysis lectures, 30 plus lectures, 6 hours of content, and I'm regularly adding bonus lectures as well. So the coupon code is early bird. That gives you 25% off. And of course, the Patreon link with a 16% discount also available down in the description below if you want to join our Discord and get those buy and sell alerts. So thank you so much for being here. The market so far looking green. Hope you guys have a great green day and generate a lot of profits and gains. And I will see you guys in the next live stream.